In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcast, type in Old Dogs, spelled D-A-W-G-S, find our podcast and subscribe. Well, we got a great show for you today. I'm real stoked about it. We have a gentleman here who knows all about lending money, and this is the stuff that we need to purchase our properties and our investment. So this is great. I'm looking forward to this. It's been a while since we've had somebody on that can not only talk about lending in various ways, shapes, and forms here, but also to give us an idea of what that market is like today, sort of post-COVID here. So talking about Jake Clopton, and Jake founded Clopton Capital in 2010 and is active in all commercial mortgage broker operations. He has extensive background in commercial finance and interest rate markets, serves as the company president and head mortgage broker, and personally oversees each loan arrangement. Jake has personally negotiated hundreds of millions of dollars in real estate loans and advisory work. Under his guidance, the company developed an extensive network of pertinent relationships. Prior to founding the company, Jake traded interest rate hedging futures. He worked with the largest participant in the Eurodollar futures market, LIBOR, and gained extensive and unique insight into interest rate markets and commercial finance. Jake has created his company with the right balance of versatility, reliability, resolve, and measured aggressiveness in closing deals that make his company a force in the commercial real estate funding industry. Well, Jake, welcome to the Old Dogs REI Network.
Thanks so much for having me. I appreciate it. Thanks for having me on.
Oh, it's great having you on. This is going to be awesome. I think we're going to have a lot of questions for you. But first, before we get started, we always like to, get an idea of your background, where you came from, and how you got started in this industry, and all the pertinent stuff there. So,
sure.
Why don't you just give us a little background?
Yeah, absolutely. So before I started my company, as you mentioned, I used to trade like interbank hedging product futures, so like 3-month LIBOR and Fed funds, and we traded some treasuries and stuff like that. It was just a proprietary firm here in Chicago. I did that for what felt like a really long time because I worked from 1 a.m. to 4 p.m. every day. And then around the 2009-ish era, I think we all know what happened then. Interest rates went to zero, and we really need volatility to make money trading, and there was what was happening was a residential mortgage crisis, but there was also really a banking liquidity crisis, and everybody was just having trouble finding money, right? So businesses, commercial real estate, everybody. So my idea and thesis was to move into the commercial space and to start finding people money. Kind of started out, we were helping businesses, and real estate owners and stuff back then. But it very quickly kind of turned into, commercial commercial real estate focus. And that's what we've been doing ever since. That was about 12 years ago. Since that time, right? I mean, we are primarily in like the 1 to 50-60 million dollar in financing size space, kind of for all asset types nationwide. And in addition to that, I have a portfolio of commercial real estate myself. So I'm also a real estate investor.
Awesome. Are you an investor in the Chicago area?
Yeah. I like to own things that I could drive to and touch. So the stuff that I own is around the Chicagoland area. Yeah.
Awesome. Well, great. Thanks for sharing that. That gives us a good background. It's kind of an interesting shift, though, and just out of curiosity, from the futures, focus and futures market to commercial finance. Was that a difficult transition for the company?
For myself personally, it was definitely a big change, but I was ready to, kind of get out of that world and I guess start talking to people instead of just staring at a computer,
Right.
But no, I mean, I've always loved real estate, finding money for people at the time was, definitely something that was in need and remains, to be to this day.
Yeah, that had to be a rough time. I mean, especially, right after the Great Recession, trying to fund, some commercial projects. And now, granted, I think probably that space wasn't hit as hard, obviously, as the house, the residential. But was it tough, sort of getting off the ground there?
Yeah, I mean, it was pretty tough, right? Because I mean, the issue was it was a banking crisis, and what it really came down to is a lot of the banks just they were in danger of becoming insolvent. A lot of them, right? So then, if the Fed hadn't stepped in the way it did, and they hadn't put together all these policies and TARP and all this other stuff, and propped up asset prices, there really wouldn't have been any money to lend out, right? Because banks are levered several times over themselves. So it was at the time, basically, if you basically found money and people that were lending, people would just come to you, right? Because you were probably one of the only games in town. This crisis that we're coming out of here is a little different, right? It's a health crisis. It's not a banking crisis. So the lending has remained active, but careful this time around. So it's a little bit different, right? But back then it was definitely very much so a banking crisis, not just for residential, but also pretty much everybody.
Yeah, and I guess the first thing that comes to mind is that I'm sure you cover a sort of a broad cross section of asset classes, but the whole office world has really been hit pretty major in most major cities like Chicago, New York, LA, San Francisco, places like that. Have you seen the sort of that impact as a lot of companies went virtual, or they basically started having people work from home, especially in the tech industry? I don't know how that might have impacted Chicago, but what happened to the office space after COVID in your sphere there?
Yeah, I mean, the offices are still there. I think some of this, I'm not sure we've really seen what the long-term implications are of it yet, right? Because COVID was this trend accelerator, right? I mean, there was a lot of kind of, telecommuting and stuff like infrastructure in place already. So you can kind of see that, like, I think the workforce was somewhat primed for this, but it just hadn't been accepted yet. And COVID just forced it into fruition, right? But I don't think we've fully seen, what's going to happen yet. I think some people are, there's some extreme points of view, right? Where some people are saying, oh, well, we're not going to need half the office space we needed before, because everybody's going to telecommute. Maybe. Right. I don't know. COVID's not over yet. And some of the office workers that I know, are still doing this hybrid model. I'm of somewhat of a, the other camp where, I think we'll start to see a lot of people want to do telecommuting. And then I think once they realize how easy it is for companies to let them go if they never show up at the office, or how fast they get looked over for promotions if they're never there and some other guy is at the office, we'll see, right, like how much people actually want to start going to get ahead in their careers. But I'm not sure we've fully seen what the impact for offices yet, but I think lenders are definitely being careful and cognizant of that.
Yeah, and I think that's that's one of the areas. I think you hit on the word when you said hybrid. I think there are these hybrid type things happening where people are working at home, but maybe they come in a couple of days a week or maybe once a week, for team meetings or whatever it may be. It sounds like companies are testing things out, but I know that some sectors like retail, for example, I mean, they've been struggling as it is, with the growth of Amazon and online and the things. I think COVID just kind of accelerated that.
Yep.
But so it's in a kind of a different space. But office, yeah, like you said, it's one of those things where it looks like the jury's still out, and to see exactly what kind of shape it's going to take.
Yeah, no, I do. I think that's right. I mean, remains to be seen, how much office space we're going to need in the future. It's probably not as much, right? But, I heard another counter argument to that as well, right? Because the trend had been in office spaces to cram people in, right? And you have these co-working spaces and everybody was all commingled, right? Now you need more square footage per occupant, right? So maybe you need as much office space with less people if COVID's going to stick around. I don't know. I think it remains to be seen, but I think people are being very careful about it.
Yeah, I would imagine that. But you haven't seen, sort of a major hit financially because, people are defaulting and so forth on the on the office side of things.
I haven't seen a major hit yet in particular office space. Other sectors, right, of commercial real estate got hit really bad, right? Like hospitality, for instance. I mean, the income just got shut off overnight. Whereas with office and lease, you get contracts, you get leases, so you'll keep getting that income, at least for the short to medium term. So what you think remains to be seen what's going to happen there to a degree.
Yeah, do you have a pretty good cross section of different types of commercial asset categories?
Oh yeah, I mean we look at pretty much anything. So we'll do office, retail, industrial, self storage, hotels. We've done portfolios of gas stations. So anything that's commercial and makes economic sense for us to look at.
Do you see certain categories actually doing really well post-COVID?
Industrial and warehouse space has done extremely well, right? Because that goes along with kind of like the trend acceleration of online space. So just think Amazon, alone, how much warehouse and how many fulfillment centers they need and all this stuff, right? So anything logistical and online has done extremely well. Apartments have done pretty decently well too. I think we saw a little bit of a blip, but I was thinking about this the other day. You can almost say that there's a government backstop to multifamily income, right? Because they stepped in with all this support for unemployment and then stimulus checks and then now rent relief, and they're really making sure that people are able to stay in their houses and their apartments. So multifamily has done okay and is going to do well.
Yeah, I'm seeing the same thing. It's been remarkable, actually. It's a lot of us were gearing up for a pretty heavy hit, and just like you said, a tiny little blip here, and that was about it. So so far so good. But then there's also talk too that there's a sort of a national scope, pending foreclosures, forbearance, things that are sort of postponing a possible more severe reaction. I mean, the government sounds like they're going to keep coming in to to sort of try to stimulate things and get things to offset from that. But are you getting any kind of, I know you're not on the residential side, but are you seeing any kind of sort of a backlog of things that that are just kind of being held off at this point?
Yeah, I mean, I do. I think there's a backlog of things. But also think depends on where you are and like what it is, right? I'm not sure there's a backlog of residential foreclosures. There's probably been more than enough, support for people to be able to make their payments, and then there's also loan modification stuff, and then you can't even foreclose on somebody if you wanted to. I don't think right now. I'm not sure if that's still in place, right?
Right.
So I feel like those band-aids and that support went into place quick enough and will remain long enough to the point where everybody will have time to catch up, for the most part, right? There is like a big eviction type of issue looming out there where there's all these people that are behind on rent. I mean, I can tell you from personal experience in some of the apartments we own, the rent relief, that doesn't solve everybody, right? There's no silver bullet. There's still some guys out there that don't qualify for it, that they've heard that they don't have to pay their rent because they can't get evicted, and they're just not going to pay. So there's that, right? But I don't know if, there's almost no recourse to remove them, tenants like that today, right? So I think, once this stuff kind of starts getting phased out, you'll probably see, a pop, right, in, either evictions or foreclosures to some degree, right, that were just backlogged, right? Because there is just like a normal amount of evictions and foreclosures that happen every year without COVID, right? So you'll definitely see a pop in the short term, but I'm not sure it's going to be some like, huge event where we're going to see mass evictions and foreclosures or anything like that.
Right. What about the that sort of pending correction that we've been talking about for years now? I mean, it's just gone way over the 10-year mark. Do you have a personal idea of what might happen?
Yeah. So as far as like a correction of like, I guess you're asking like asset prices, right?
Right.
So, what I look to for asset prices is how much liquidity is being pumped in the system, right? So if you look at some of like the M2 money charts out there, and you go back to like 2010-ish area, right? You can see where they started quantitative easing. That's like the government stepping in and buying bonds and all this stuff and basically just pumping money into the system. From around 2010, and I believe these numbers are right, from around 2010, 2014, we pumped in, I think it was like $4 or $5 trillion, right, into the system. We basically did the exact same amount in the matter of a couple of months in 2020, and that hasn't nearly had enough time to filter through the system, and we're still doing quantitative easing, and there's still really cheap money. Ultimately, what that means is just asset prices are gonna continue to get pushed up, right? And the Fed, and the Treasury, they need to do that, right, to thwart any like a depression, right? So a depression happens when you get asset deflation, right? So asset prices crash, and then all the loans against them become worthless, and that's when banks become insolvent. So that's what they try to avoid, right? When in 2020 when everything had to shut down. So I would say asset prices I don't think are going to get hit badly, and if anything, I think we're going to continue to see asset prices move up significantly from here. Just like you saw all from 2010 up until the end of 2019, right? Everybody kept saying we're in a bubble, we're in a bubble, we're in a bubble. Asset prices are too high, they can't go any higher, and they just kept going up. Right, because you had so much liquidity that's pumped in the system, and and cheap money, and all the stuff that was still pushing the economy and asset prices forward. I think we're going to see that, but even on an even quicker scale.
Now, on the commercial side of things, did you see sort of a major criteria change in terms of how you're lending, sort of post-COVID as compared to pre-COVID?
As far as like underwriting, per se hasn't really changed, right? I mean, there are certain things that we have to ask now, right? Like, hey, did for instance, when I look at a retail center, like, hey, how many tenants got rent relief or aren't paying or behind in rent, stuff like that, right? For multifamily, some of the products out there actually instituted COVID reserves. Like if I did like a Fannie or a Freddie Mac commercial deal for an apartment building, right? They would have this COVID reserve in there, and it was, depending on the leverage, anywhere from like 6 to 12 months, or that was basically just a payment reserve in case things went south again. Those have really been phased out. Some of the apartment buildings, we're looking at, I do see like larger kind of like aging reports, or you got to make sure that like tenants are paying at this point. But for the most part right now, I mean, we're definitely cognizant of like COVID restrictions that could potentially come back, right? Because we've alleviated a lot of them, or like how the building, or how the property or the business performed throughout COVID, and then potentially how it's going to perform going forward. Hospitality, again, hotels is a good kind of proxy for that, right? Because a lot of hotels depended on business travel, and some hotels have their areas have opened up and they're doing great again, but maybe they had different demand generators, right? The ones that were really dependent on business travel haven't really seen that come back yet, even though the economy has really opened up, and we're not sure if that is going to come back. So there are some things that we're definitely keeping an eye on for structural changes in the economy, and that how that's if it's going to come back and how it's going to look going forward. But for the most part, underwriting hasn't changed. It's just being cognizant of what are going to be the long-term effect of COVID going forward.
You don't see more shorter terms and for borrowers at this point, or maybe even avoidance of agency debt, because of the restrictions?
Yeah, I think it just depends on who you are and right, like what your strategy is, right? So, I mean, if you're a long-term holder and you've got a stabilized apartment building, locking in 10-year debt at 3% on a commercial loan, it's not too bad, right? If you're buying a building and doing a value add strategy and you're looking for short-term appreciation with a value pop, and then maybe you're going to recap. I mean, we're definitely doing shorter term deals. So, I am seeing more shorter term stuff right now than I normally would. Lots of construction, lots of renovation, lots of value add type stuff. And I think a lot of that actually has to do with the fact that, for stabilized properties, there's actually quite a bid-ask spread between buyers and sellers, it seems, in the market right now. Whereas sellers, they're really wanting top dollar and they're not moving. And some of the buyers out there, they're saying, yes, things are looking okay, but maybe they're still a little skittish, or maybe they're looking for a deal or something like that, right? So I'm not seeing as many stabilized acquisitions happening. It's a lot of the activity is more on the shorter end. But the long-term fixed rate market is still certainly very active.
A lot of bridge loans?
Yep. We're doing a lot of bridge and a lot of construction.
Right. Hey, old dogs, we have a new sponsor, Robert August Custom Shoes. If you're looking to express your unique style, what better way to start than your footwear? Robert August Custom Shoes brings you the stylish fusion of 21st century technology with old-world European craftsmanship. Imagine designing a completely custom pair of shoes, crafted from the finest leathers from Italy, Germany, and Spain, and sartorial fabrics from Europe's most prestigious mills. The result will be a truly exceptional design that you won't see on anyone else. Don't wait. Explore the vast array of options available today at robertaugustshoes.com. That's robertaugustshoes.com. And a lot of folks listening are, kind of saying, well, how does this pertain to me? I'm trying to build a portfolio, and this guy is dealing with, large commercial entities, but you have a sort of a minimum $1 million loan, right, is what you mentioned earlier. What what kind of criteria you're looking at in people that might be taking out $1 million or $2 or $3 million loan? What are you looking at in terms of the criteria for the people that would be seeking that maybe to buy an apartment building for for $3 million?
Sure. Yeah. So if you're going to buy a small balance apartment building, right, and most of the people I see, getting into, just multifamily, right, for the first time are usually making that step up from like residential, right? Maybe they own like 2 or 3 like single family homes and they rent those out, or they build a portfolio of those and they want to make a step up into buying an apartment building. That's what I see a lot of the people that are the main buyers on the deal and not just an investor. I'd say that the biggest difference between going from single family homes to multifamily is just the idea that on one side you're dealing with residential properties and the other side's commercial, and the financing between the two is very different, right? On one, it's really the residential stuff is really just home loans, to be honest, and that type of underwriting for just a residential mortgage is all really based on the person, right? So you're going primarily from person to property. Commercial is kind of backwards, right? And it's very different. So commercial, like when I first get a deal in, I'm really just looking at the property side. I'm underwriting it, making sure all the numbers work and the economics of the property work. And then I can go to the person, right? So if the building works, then I'll start looking at, who's buying it. And, what I'm looking for from a buyer is, a couple of things, right? So if I do, let's say like a Fannie Mae, Freddie Mac type of small balance loan for, an apartment building, I'm looking at the buyer to see if they have a net worth that's kind of similar to the loan amount. Has like a decent level of liquidity, outside of the loan, usually around like 6 to 8 months of like principal and interest payments, right? Whatever that would equal up to as like liquidity outside of the deal. And then I'm going to look towards their experience in owning multifamily properties, right? Like for instance, if they're planning on managing the property themselves, I'm going to want to see, a long history of property management, right? Of managing multifamily properties, right? Or else I'm going to need them to go and get a property management company and put that in place. So, there's, a couple of things that we normally check up on with the actual buyers, net worth, liquidity, and experience. And as long as those things check out in the property underwrites, and it works, we should be able to get a deal done.
Great. I don't know how actively involved you are in your deals. I know some people, will work with a broker, and the broker will actually help them, even bring partners into a deal or something of that nature. Have you ever, been on that level?
Yes, we do get involved in the equity side for certain situations, and it normally needs to be like a really large kind of transaction, right? With like a $3 million minimum equity check. We're not like a broker dealer where I'm out here, like selling real estate securities to people's like IRAs and stuff like that. There are operations out there that do that raise like small equity checks and stuff like that. The equity that we do is primarily for like short term type of stuff, like construction and bridge loans, right, and stuff like that. As far as like our involvement in the deals, I mean, we're extremely involved from the start to finish. I think maybe some people aren't so involved, but I mean, we just closed a pretty big deal for an industrial building last week, and I mean, we're so involved. I mean, I was calling the zoning office to try to push those guys to get the zoning reports out faster. We're calling title office. We're dealing with lawyers. So, we're extremely involved from start to finish.
Gotcha. If you could give me sort of a broad stroke here, what loans just seem to be the hottest right now, or what type of lending seems to be hot?
Probably construction for almost any asset type. Probably construction. I think, in times where, you get, banks that pull back, especially on like loan to values and loan to cost. construction is usually one of the more difficult products to place. And then that's when we get lots of requests for construction financing. We did a lot of single family home construction deals throughout 2020. As you know, like the housing market was on fire, right, the entire time. So we kind of pivoted a little bit and did a lot of home builder financing and, some flips and, stuff like that. Build to rent type stuff as well for single family homes. So I'd say as far as like what's the large request we're getting recently is probably construction.
Gotcha. Yeah, that's understandable. I mean, there's a big shortage out there right now, especially in the residential. Are you lending all over the U.S., or do you have a specific region that you focus on?
No, we'll look nationwide. I'm sitting in Chicago, but the vast majority of what we do is outside of the Chicagoland area.
Okay, gotcha. This is a little bit different, I'm sure, for the folks listening in terms of how that might impact them. But what for the person that is looking to grow and especially expand into multifamily, for example, what advice would you have for someone that is making that move out of? Maybe they've got some fourplexes and so, a few other things that still fall into the residential side, but they're looking, for that 100 unit plus apartment, or maybe it's 50 units, but they're looking to make a jump. And what kind of advice, what would you advise them in terms of what they need to put together in order to make that move?
Yeah. So I can give an idea of kind of the way that we've looked at our own portfolio that we've done. Whenever I'm looking at and evaluating an asset, right? Even if it's multifamily, I don't look at it as much like it's just an investment property, right? I mean, the way that I've always looked at it is it's a business, right? And my business is owning these hard assets, and what I'm doing is providing a service to people, and that service is housing. And once you kind of start looking at it that way, I start looking at like, well, why would somebody live here? What are the demand generators for a person to live here? And what around the area, is going to attract people to my building, right? So like we traditionally buy assets that are close to schools, close to transportation, stuff like that. I do see people that are kind of getting into real estate just looking at LoopNet, right, or something like that, and they just see a cap rate and they're like, wow, that's attractive, right? But a lot of times, those assumptions you see that are just in offering memorandums, and broker packages, just they don't really work out that way, right? So you want to make sure that you're buying a solid asset that's going to continue to be attractive to renters, and perform well over the long time. For somebody that's going to buy, what they need to have together, personally, is one, obviously the equity, right? Whether that's just going to be all theirs or they're going to put that together through friends and family, and then really a good plan about how it's going to be operated going forward. Right. I mean, it is a full-time, if you're going to go into commercial and you're going to have, let's say, 20, 30, 40, 50 unit apartment building. I mean, that is a full-time job, operating that thing with a lot of different skill sets that are probably needed, right? From leasing, just general property management, repairs, all this stuff. And, I generally, recommend anybody just find like a solid property manager in the market that's going to be able to help them, manage that thing and protect their investment. For anybody that hasn't managed property before, I wouldn't recommend going into it, and trying to do it yourself. I think you're going to save a lot of money having a good property manager in there.
And so would you recommend maybe putting together maybe a mini business plan or a pitch deck, so with a pro forma in it, outlining what you hope to achieve and how you're going to achieve it?
Yeah, I mean, I think it's important to have, a good game plan going in, and not try to figure that out retroactively, right? So yeah, absolutely put together, even if it's just for your own benefit, right? Put together the pitch deck, put together the full business plan, put together a pro forma so that, your return expectations are set kind of up front, and you can compare them, going down the road to how you thought they were going to work out. I definitely think that all that is very important to be able to do, even if it's just for yourself and you're not looking for investors.
Right. Wow. Thanks. That's good advice. Well, your company, it just seems like it's very well positioned and great, in a great way there. What's sort of your long-term vision, and what excites you about the future of your company?
Long term, I think we're going to try to, continue to do what we do, but always, improve on it. Right. I'm not trying to run a million different races. We're trying to run, a couple really well. We're going to stick to, our space, but continue to add, lenders and equity providers. And also, we do have some cross sales, right? We do commercial property insurance as well. Because we've kind of moved in that space because a lot of the times we're actually, generating the reason to get new insurance, right? And, and also kind of network with some other providers that we can help our clients out with, so the title offices and stuff like that. So, I think, overall, the idea is just to continue to improve upon what we're doing already, and to try to reach more people and get more suppliers.
Awesome. Well, we have kind of been zipping by on our time here. We have a session that we call a Wrap It Up, where I ask you a series of sort of quick lightning bolt type questions here, and if you can respond, that hopefully the resources that you've used will be of value to some of our listeners too. So if you're ready, we'll move into our Wrap It Up.
Sure. Yeah. Do it.
All right. Favorite real estate book?
Favorite real estate book. I read all of the Rich Dad Poor Dad books. I actually enjoy those.
Yeah, those are great. Those are great. Yeah. How about favorite just general business book?
I liked all the Freakonomics books.
Those are good too. Yeah.
Yeah.
Great. How about most valuable website for success that you use on sort of a regular basis as you try to move forward, making decisions in your business?
Most valuable website. That's interesting. So I do a lot of reading. So one thing we try to do, and I try to do for business, stay on top of every trend possible. So I'll just name a couple that we read off. I read Wealth Management, I read Real Estate Investing Today, Think Realty, CNBC, one every day, Eye on Housing. But I try to read all the new pertinent stuff that's come out.
Great. What about you have like a favorite app that you use? When you're on the, I don't know if you take train to work or whatever, but where you're just kind of referencing on a regular basis throughout the day. I mean, it could be personal, it could be business.
I'll tell you what, we actually have an app that I think is very useful. It's just a really basic, easy to use commercial mortgage calculator that shows like property returns and stuff like that. I've had a lot of people tell me they really appreciate it. It's like free on the app, both the app stores. Just called the Commercial Mortgage Calculator app. Yeah.
Okay. What was it called again?
Commercial Mortgage Calculator.
Oh, great. Okay, good. Yeah, we'll have a link to it.
So that one.
Okay. Okay. How about a favorite quote? A quote that inspires you, or that kind of talks about your philosophy in business or whatever.
Favorite quote. I don't know. I'll give you a somewhat of a philosophy instead. So, when I started my business and people always ask me how I got started and how I actually did it, I honestly, the short answer was I just started asking questions and picked up the phone and called people. I think you can spend a lot of time in analysis, sitting around and trying to do this and that. But honestly, even if you don't even really have the questions, just call people up, ask them, start calling brokers. If you're looking for investors, you just got to start calling people and asking, right? So, I think in anything you're looking to do, if it's get involved in real estate investing or start a business or whatever, just start making phone calls, and eventually you'll get guided to the right spot.
I like it. That's great. And the final one here is a little odd, but I think you can have fun with it. We'll see. But basically, if you lost absolutely everything, all your assets, and you had to start all over again, start your business over, knowing what you already know, and all you have is $1,000 in cash, what would you do with that money to relaunch your real estate investing business?
$1,000 in cash. Is that all I can eat with too?
Well, yeah, I don't know. We didn't really address that.
Well, I'll tell you. In my experience, when you're going into real estate investing, I think everybody thinks like, okay, I'm going to start with like small deals and work my way up from there. If I were to completely restart over again, I would just go out asking and putting together probably $20 million deals, 30 million, something like that, because those are, and I sure some people won't believe me, they are easier to get done than the $500,000 deals. They're because you put those deals together and they're big enough for lots of investors to get interested in, and the financing is easier, and that's what I would start doing, right? Because the buildings that we own, they're all just my own, but they're smaller properties, right? If I were to completely have to start over, I would just start syndicating out investors into much larger properties.
Oh, great. Wow. Well, this has been some great information here. I really appreciate your insight and some of the practical information provided as well. I'm sure there's people listening too that'd like to find out more about what you do and your company. What's the best way for folks to get a hold of you in that regard?
So I'm extremely easy to find. You can DM me on LinkedIn, call me directly, or shoot me an email. Bill, you can put my contact information anywhere, I guess in the summary, and or just go right through our website to the contact form, and somebody will reach out to you. Anyway, I'm always around. This is all I do, so happy to chat.
All right, great. We will do that.
Cool.
Well, man, this has been great. I think there's some good information there, and definitely got me thinking about stuff too. But we have this tradition here. I don't know if you've heard any of our other shows, but we're called the Old Dogs REI Network here. So we have all of our guests close us out with their best old hound dog howl. So that's right.
There you go.
Right. Come on, do one more bigger one than that. Let's try. There you go. All right. All right. Well, thanks. That's one of those things that just, guests just get to do for fun, right? So
I knew it was coming. I didn't know ahead of time. As soon as you said it, I knew it was coming.
Well, thank you so much, Jake. I really appreciate your coming on and sharing some good information there with our guests.
Yeah, no, absolutely. And again, I'm happy to chat with anybody anytime if they want to reach out.
Well, we'll definitely have your information there for folks to do that. And I also want to thank all our Old Dog listeners out there too for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note everything that Jake talked about today will be accessible. We're going to have it outlined in detail in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog, and you're going to look for the episode with Jake Clopton. Well, thank you so much, Jake, for being on, and we're looking forward to hopefully maybe talking to you in the future there.
That sounds great. Looking forward to it. Appreciate it.
All right. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.